time. But, although it was good, but, we were fairly choppy. And towards the end of the session, last hour, we saw the Nifty market, in fact, slip into the red. Although the broader end of the markets, provided some bit of solace. We saw Nifty small cap index gaining in excess of 1%. Even mid caps held out firmly, which is why the advance decline ratio was also in favor of gainers today, 3:2. That was the NSE advance decline ratio. Of course, today's up move was largely led by IT stocks, right? You saw mid-cap IT stocks doing extremely well on the back of good numbers from the likes of Persistent and Coforge. Both the stocks hit a fresh high in today's session, Yatin, and took the entire IT pack higher with itself. So IT, top sectoral gainer, that index gained in excess of 2%. FMCG was also, saw some signs of buying today. Ended the day in the green, but autos, pharma, and metals, these are some of the pockets that continue to witness selling pressure. In terms of result reactions, quite a sharp reaction this earnings season for all the stocks, all the companies that have been reporting numbers. So case in point was Bajaj Finance. That stock cleared that 7,000 mark on the upside today. Good set of numbers, and management commentary was good rather. And brokerages, of course, have upgraded their target prices as well here. Top Nifty gainer gained in excess of 4%. Tech Mahindra, Bajaj Auto, Tata Consumer saw some buying after weak set of numbers. We saw the stock coming under intense selling pressure, but today some bit of buying coming in there. Coal India, HDFC Bank, Yatin, seems to have picked up pace. It has been doing well ever since it reported numbers. On the flip side, pharma names like Sun Pharma were under pressure. M&M, SUV maker, that was under pressure. Eicher, Power Grid, some of these utilities were also under pressure, aside of L&T and Shriram Finance. But result reactions pouring in thick and fast. You saw Coforge, Persistent, some of the top Nifty 500 gainers. What were the other movers?
So, Nandita, as you were mentioning, the first half was better, second half, quite choppy, and almost 150 plus points down from the day's high. So the market remained weak, but the mid cap and small cap indices managed to, cut the losses from the, day's low. In fact, the small cap index was up nearly 1.25% and 0.6% higher for the mid cap index. Advance decline ratio also looks fairly good, 3:2 versus the past few trading sessions. And mid cap IT PSU banks were the ones which were leading in trade. If you talk about Nifty 500, stocks like Deepak Fertilizers rallied 17%. Of the government of India notified anti-dumping duty on IPA, which is isopropyl alcohol, from imports relating to China. So some relief coming in for companies like Deepak Fertilizers, who have been witnessing some pressure in pricing because of cheaper imports coming in from China. So that news worked for them. As you were mentioning, Coforge, Persistent, and also First Source Solutions, all of these mid-cap IT stocks were up anywhere between 10 to 12%. What did not do well is Fluorochem. That stock, despite selling, a stake in their EV subsidiary, which is making EV chemicals, that stock saw almost a 7% cut coming in. ABB, Siemens, as well as stocks like Chennai Petro were seen under pressure.
All right. Of course, those were some of the movers and shakers in today's session. Broad end of the markets clearly, bringing some cheer in an otherwise, somber and gloomy environment, because markets have been witnessing selling pressure. 24,500, not, the market, of course, Nifty was not being able to defend that in today's session as well. But let's shift focus to some good news and some movers, on the index. Bajaj Finance, that stock was up almost 5% on the back of, good set of numbers. You can say that because, of course, management commentary was also pretty much positive. Reported near stable asset quality in the second quarter, I beg your pardon. There was a marginal increase in its annual credit cost guidance, but the management has noted that both funding costs and credit costs have likely peaked. I think this is where the street, got excited. Also, the fact that margins were pretty strong, and that was also one factor that was among the key positives. The company has raised its FY25 credit cost guidance to a little over 2%, vis-a-vis 1.75 to 1.85%. Brokerages feel that after the underperformance that the stock has seen over a period, not recent, over a period, valuations are fairly attractive, and the sharp underperformance actually presents a good entry point when it comes to Bajaj Finance. In fact, brokerages have also raised their target price. Morgan Stanley raising the target price to 9,000 rupees per share. Let's look at what Jefferies has to say then. It has a buy rating. Target price at 8,400. It is, noted that the second quarter earnings were largely in line with estimates. AUM growth was almost 30% on a YY basis, although profit growth lagged a bit due to the surge in credit costs. Aside of that, stability in net interest margin was also something that was a key positive. Also, there was a one-off gain, right, through the because of the sale
Yeah.
of stake sale in Bajaj Housing as well,
Housing,
that
correct.
boded well for the company. Now, if credit costs stabilize as what the management has indicated, it would actually help the company to revert to 20% plus earnings growth. That's what Jeffries has pointed out. So that means the company will see a turnaround,
Yeah.
or it's on the cusp of turnaround, and also the fact that it has corrected so much may be a good time to enter into the stock.
Correct.
That's what brokerages are maintaining. Also, there are some new product launches that the company may benefit from. Also, easing rates. Once RBI starts cutting rates, that the company will also be benefiting from there. Valuations, according to Jeffries, are reasonable at 3.8 times FY26 price to book and 20 times price to earnings. Just want to point out, over the last 1 year, the stock has shed somewhere around 10% or thereabouts. But this second quarter performance, with this, we could be looking at a reversal in fortunes for Bajaj Finance.
I think one thing which the market didn't like is the increased credit cost expectations. I think barring that, the numbers were in line with expectations. As you were mentioning, Bajaj Housing, that also contributed to the one-off gains with the quarter gone by.
Maybe, Yatin, also the fact that they have increased the guidance, but they've also said that it may have peaked. So post this,
Correct.
maybe they may get contained. Maybe
Yeah,
that's one
there
thing
is a
that
there is a likelihood, but there were also short buildups, in the past few trading sessions. I think that might also have played the
okay.
equal role for the stock moving 5% in trade. Nothing like a 5-7% move which came today, but yes, the market's probably anticipating that the peak of the credit cost cycle is probably behind them. But Paytm, moving from one financial services company to the other one, which is 197 Communications. Now, Paytm today announced that the National Payment Council of India, NPCI, has once again allowed them to onboard new clients, for the UPI services. Remember, RBI few months back had barred the company, from onboarding new clients on their, platform. So finally, some resolution on the regulatory front coming in for Paytm. In fact, if you look at the stock of Paytm, it had continued to fall because of this RBI restriction which had come in. Now, if you talk about the specific, details of the entire, issue, the company was earlier barred by RBI for, not onboarding new users via its Jan 31st order. So, in the month of January, there was a big issue which RBI found various flaws in their KYC norms, in non-compliance of various issues. But I think that has got resolved. In fact, the new UPI users onboarding would mean better business visibility for Paytm moving forward. In fact, Bernstein has an outperformer call on Paytm with a target of 600. However, it's much lower than the current market price. In the Q2 results also, we have seen the GMV increase, merchant road disbursal also being on the positive side. In fact, the efforts on cost controls were also visible, with indirect expenses registering a decline on a year-on-year basis. Overall, Q2 numbers were decent. That also helped the stock, make a momentum move today, along with this, UPI onboarding news which came in. The stock intraday moved as high as 10%. That's slightly lower, but he has good news coming in for Paytm, both on the quarterly results front as well as on the regulatory front.
All right. Of course, good move coming in on shares of Paytm. But the flavor of the day clearly was the mid-cap IT pack, right? The likes of Persistent, Coforge reporting great set of numbers. Stocks also reacting sharply, hitting all-time highs, 10% kind of moves coming in on each of these stocks, and, pulled up the entire IT pack with itself. 2.5% kind of gains coming in on the IT index. But looking at Persistent in isolation, reported a 5% constant currency revenue growth on a sequential basis. High-tech vertical, which was a little slow, has in fact is likely to pick up going forward as per the management. In fact, the company has also maintained its revenue aspiration of $2 billion that it aims to achieve by FY27, and to grow its margin by 200 to 300 basis points over the next 2 to 3 years. I think this is another thing that the street really liked. On the AI front also, the company has been developing robust strategies as well, focused on areas for technology, for business, etc. and it also plans to integrate AI across all verticals. Brokerages have welcomed this earnings. Even the street has welcomed this solid set of earnings for the third quarter, which is why, of course, the entire IT pack was basking in glory today. Nomura, although has a neutral call on the stock, target price at 5,200 per share. It says that the resilient growth that the company saw in the second quarter was driven by strong execution, and deal wins, of course, as per Nomura, were pretty healthy. Revenue growth was above expectations. Margins are likely to improve in the second half, and of course also the fact that it is aiming for a 200 to 300 basis point expansion in margins over the next 2 to 3 years, something that bodes well. Company, according to Nomura, trades at 35.7 times its FY27 earnings per share. Although the stock is looking expensive after the stellar up move it has seen over the last 1 year or so, brokerages believe that it justifies those premium valuations as the earnings growth trajectory is pretty much superior. So that is something that brokerages have noted, and that's why they believe that it still has more room for upside, even though the stock has doubled. If you see what it had, it's compared to last year. For the last 1 year or so, it has grown somewhere around 98%.
Wow.
But still more upside left. So.
Yeah, and I think this quarter the EBIT margins came in at 14%, despite the fact that the employees' wage benefit was given during the quarter, so that the kind of salary hikes and the wage hike that we have seen, despite that they have been able to maintain margins at 14%. So great going for them, and I think execution also for the quarter improved substantially.
That's true, Yatin. Mid-cap IT, and in fact, the entire IT pack was up and about, providing support to the market. But 24,500, we haven't been able to defend that. Let's see. I think we will remain choppy, or because global cues are also pretty much subdued these days. But let's see what really happens tomorrow morning. Today we made an attempt, but couldn't really sustain those levels. Let's see what happens tomorrow. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. But you guys stay tuned to Money Control for all your other news and updates, and have a great evening.